Congratulations on making it this far into the Bitcoin bear market. It could get much worse moving forward, and I want to show you why. There's a really big sign that I've got here for you guys on this chart right now that I don't know, people might start talking about relatively soon, but it's actually to do with our death cross situation here. So we've got two moving averages that I think are very important right here. They are the moving average 50 and the moving average 200, and when you bring them together they can form what we call golden crosses when our short-term moving average, that's the 50, when it crosses above the 200, and death crosses when it crosses below. Basically what this is we've got two moving averages, one that hugs the price a little bit closer, one that it hugs the price a little bit less close, and it represents momentum, right? So when our shorter term moving average crosses below the longer term moving average, that can give us an indication of where momentum is on the chart. You can see what happened when we got this death cross here on the daily time frame. We formed our death cross right here when the price was trading at about $43,000, and since then Bitcoin has less than halved from there. Bitcoin has gone down to less than half of that price, down to its low. It's fallen by about 65%. And the news that I have for you in this video is we're about to do that on the weekly time frame. There's no beating around the bush here. I'm not going to waste your time on this one. We are very close to forming something quite similar. In fact, according to this, we're going to have this death cross by the end of next month, by the end of January. And what we're looking at right now is a situation where these moving averages have started to converge. We haven't continued to keep this uptrend with our short-term moving average on the weekly time frame. And this is a really big shift in momentum. It's showing us that momentum is crossing bearish right here. There are some really strong implications of this, and most of them are not particularly great. So I want to cover some of this with you in this YouTube video and show you how, look, even though this is going to be a bit of a scary one, this is still a great opportunity for us as traders, and I'll be showing you why in this YouTube video. And then, of course, I'm going to get a little bit more into the short-term analysis that you guys come to this YouTube channel for. So if you're excited for this, do me a favor and smash up the likes as we're coming into this YouTube video. It is a Saturday today. Merry Christmas to those of you that are celebrating tomorrow. This is an important time, not just because a lot of people are going to be on holidays and stuff like that, but also because the weekly candle is about to close, and that's why I wanted to start bringing this to your attention now. Before I get to any of that stuff though, just take a look at this chart historically. This is the BLX chart on Bitcoin, so it's, as far as I know, the most price history we can possibly get for Bitcoin on TradingView. And it takes a long time to form these moving average lines, right? Because you need 50 points of data for the red line, and you need 200 points of data for the orange line here, being the 50-week and the 200-week moving averages. These are really important lines, and I've already covered a lot of this with you. The 200-week moving average has been critical for showing where we might find support for Bitcoin, going all the way back to January of 2015. That is 7 years ago. Pushing 8 years actually as of next month, and we didn't actually ever fall down below the support area. Take a look at this, managing to sustain ourselves above this price area right up until here, right up until June of this year. June of this year was the first time that Bitcoin ever penetrated this moving average and stayed below it. And not only did we drop below this moving average, we even came back up for a retest, right? Look at this. We didn't quite get to the line. We actually overshot it by a little bit, but I think it's fair to say that we lost the line right here. We came back up for that bearish retest over here, and we've continued to drop down ever since. This is exactly what you'd expect when you lose a critical area of support like that, a further 34% drop. And honestly, looking at this chart, it could go much lower, and that alone is not good. This is something we've already covered, so if you were subscribed to the YouTube channel, if you've been regularly engaging with this content and smashing up the likes and doing all of that amazing stuff, thank you all so much. You are going to know about what I've just described here. But what I think now is an additional point of concern is that we are starting to get this bearish crossover now. And the thing is we've never had a bearish crossover. This is a first for Bitcoin. This is the first time we've ever seen something like this, because again, with this price history on this chart, we haven't even seen a golden cross, let alone a death cross, because we came pretty close on this occasion right here, but we didn't quite do it, right? Our short-term moving average didn't fall below the longer-term moving average. We were able to sustain that momentum even though we only just barely pulled it back up. Bitcoin is going to have to pull something incredibly impressive out of the hat in order to do that this time, because we are trending down quickly. If you look at these red dotted lines, this is a steep drop right here. This is indicating that this moving average could drop by another kind of 9% just within the space of a month. I think it's going to take a lot. I don't even know if it's possible anymore. Obviously, it would be possible if Bitcoin did something absolutely crazy, but I think it's going to be very, very hard to change this, from a downward trending kind of situation to, something that curves up a little bit to save us from getting this crossover. This is where, things get really, really scary, because again, if we take ourselves onto the daily chart that I was on at the very beginning of this video, you're going to see that the last time we formed something like this, it was pretty bad for the market. And historically, these death crosses are not good. If we take a look at some of them, I can show you what they look like on the daily time frame. Here's a great example when we lost our uptrend from the 2017 bull market. We managed to form this death cross right here. And again, I mean, the price level that it came in at wasn't particularly impressive, because we got the death cross at about $7,000. And then, yes, the price did drop by more than 50% from that point, but it took a while, right? I mean, we spent then another 220, basically 7 months, a little bit more than 7 months trading sideways, until eventually crashing down and dropping by a little bit more than 50%. So, it worked and it was useful, but obviously there are limits to it. This is important though, because this is on the daily time frame, and so even though we're getting quite a few misfires here, take a look at this. We're getting, a golden cross right here crossing bullish at about 5,300, but then a death cross crossing bearish at about 7,000, right? Not the most impressive trade. I mean, this is like a 40% pump, which I know sounds pretty good, but the price went up to 14K. You would have missed out on, an additional nearly 200% of upside, or 150 odd percent of upside, if you just trade based off these crosses. So I'm showing you the limitations here. Again, my job, and I've talked to you about this in the previous video, is my job here as a YouTuber and as someone who actually trades the markets is to point out my own limitations, because I am putting forward analysis and I'm conducting this analysis for myself, and then I'm sharing it with you guys on this YouTube channel, because I am trading from this first and foremost. And if I wasn't poking holes in my own analysis the way a scientist would poke holes in their own hypothesis, I wouldn't be doing my job properly, and I'd end up losing a lot of money very, very quickly. So it's important to note where these limitations are. Sometimes we just fire off these crosses constantly, but when they're more important is when we've been in a pretty clear trend in the market for quite a while. Here's another death cross right here. Meant absolutely nothing for the market. We formed a golden cross afterwards, and then a death cross after that. What's very important is when we form these in trending markets, and they really just kind of in general will show us just where the momentum is shifting, right? We're not necessarily looking to say, okay, death cross means down, golden cross means up. What we are looking to see is, what is the momentum showing us, right? Where is the momentum on this chart? And are we gaining momentum or losing momentum, in terms of trending upwards, for example, right? If we're moving upwards and that's our trend, are we gaining momentum to support that, or are we losing momentum to call that uptrend into question? And if we take a look at this again on the weekly chart, this is where it gets really interesting, because on the weekly chart right here, we're still trending upwards on the 200-week moving average, but we're really starting to level out. We can actually see it a little bit more with the dotted lines that we have here. And especially if we compare it to the kind of uptrend that we had on this 200-week moving average, kind of going back to 2021, we had a pretty steep uptrend on this moving average. And we're diving really deep into things that I think most people just wouldn't even pay attention to. And again, that's exactly the point of this YouTube channel, right? We really need to have a very firm, solid understanding of, in my opinion, the simple stuff. That's where the bulk of the analysis lies. And I think this is where people really struggle, is they just don't look at the simple stuff very much, and then they start trying to complicate things massively because they don't understand the simple stuff very well. If you understand this stuff, you're never going to need to throw on a bunch of crazy indicators. We're 9 minutes into this video and I've only shown you one indicator, on two different inputs. Super simple chart here, but we're getting a lot of information out of it, because this 200-week moving average is a representation of the extremely long-term trend for Bitcoin, and it is leveling out. Whereas previously, and for a long time, Bitcoin's uptrend with this moving average was pretty firmly upwards. We have now lost that. In fact, as far as I can see, this is the most flat our moving average has ever been. Let's take a look. There's only one situation that I think looks similar. So this line pretty much perfectly overlays the moving average. Yeah, we're more flat now than we were in 2015. Look at this. There isn't a single instance throughout this chart Okay, we were a little bit flat like this back in 2018, 2019 as well. There really isn't much we can find on this chart where Bitcoin's moving average was as flat as it is now. And what comes before a downtrend in moving averages is flatlining, right? If you're trending up, you first need to flatline before you can start trending down. And that's what we're potentially in right now. This is where things get really, really worrying, because there's the speculation of a very long bear market for the market now, a very long winter, something that would indicate that perhaps for multiple years, maybe even, longer, maybe towards a decade or something like that, we could be in a situation where crypto markets don't recover, in such a way where they're setting, kind of brand new all-time highs. Unfortunately, things like this give those ideas more credit. You could choose to ignore stuff like this, but especially when it's happening on such a large time frame, I think you're stepping into territory that, I would go as far as saying, and I hate to even be saying something like that, you'd be potentially making yourself look a little bit naive. Now, here's the thing, and I think this is really, really important. I think that even if we did form a death cross, and even if things took, and because generally the implication of a death cross is that, you're staying in a shitty range for a long time. There's no other way around it. That's generally what it means. Even if we did form something like that. Now, the reason that I wouldn't be particularly worried as a trader is because that doesn't mean we're not going to have uptrends. We very well could have uptrends to levels like 30K, 40K. I've been saying that for a while, and I still think that it's entirely on the cards because we don't fall down in straight lines forever. We haven't seen a real sustained uptrend, a multi-month bull market for a very, very long time. But I want to remind you that before we managed to fully recover from this huge downtrend, we did first form a multi-month, this is like a 6 to 7 month bull market. We did first form a 6 to 7 month bull market before then essentially coming right back down to where we started, where the bottom of this bear market was 3,100 and we fell all the way down to, depending on which chart you're looking at, 3,800, 3,600, 3,400 on this flash crash that we saw as a result of the global response to the COVID-19 pandemic in March 2020. This is absolutely critical information because that's showing us here that we didn't manage to overcome this bear market realistically up until at least this point. But in between here and this peak, we had a huge rally. We had a huge rally in between, and that's what we call a bear market rally. Now, to say that something like that isn't possible to happen again, I think is also where you'd be stepping into that territory of being quite naive. Here's the thing. If we take the bars pattern tool and I show you what this could end up looking like, and I just draw this onto the chart right here, it starts looking really possible that Bitcoin could do something like this again. In fact, I'm going to go as far as taking this bars pattern, but taking it right up to this COVID-19 crash to show you what it would look like if we got a rise up and a subsequent drop back down. It actually, to me, makes a lot of sense. This looks like a very, very plausible bit of price action right here. We could even, if you're super bearish and you really enjoy the bear porn, we could even add in a little bit of price action like this, and it actually all starts to look very, very realistic. Obviously, this is a completely unscientific way to do technical analysis. I'm not trying to say that there's any accuracy in this, but what I want to do is help you visualize what a potential future might look like. Our job as traders is to make sure that we can visualize the future and then put our money towards that direction. If you can't do that, and if you can't intensely visualize what the future might look like, you're not going to have a very good time being a trader, because a lot of the time, quite irrational things happen, quite hard to imagine things happen in the market. And if you can't kind of play that, do that role play a little bit, well, then you're going to have a hard time picking up gains in these financial markets. But I think this looks entirely possible, and moves like this would afford you really, really good opportunities in the market. I want to remind you guys that whether this happens or we drop down or whatever, I will be trading these moves, whether we're going up or we're going down. And I'm primarily going to be doing all of that on Bybit. I want you guys to check out the link in the description down below, because when you use it, waiting for this to load up right here, when you use it, you're going to be getting up to $30,000 in deposit bonuses signing up using my link to Bybit in the description down below. Up to 30k in bonuses, meaning that depending on how much you deposit and how much you trade with, you can be getting this much cash back into your account as a bonus. And once that money lands into your account, you can actually trade with it. So if you qualify for it, and you can see that there's a long list of kind of opportunities here, $350, $800, there's a lot that you can get, up to 5k, 9k, $15,000, depending on how much you're depositing and trading. This money is something that you can use in your trades. Once you get that free cash, you can just YOLO that shit into a trade, do whatever the hell you like with it. And if you make money using this cash, that is yours to keep. Well worth checking out, ladies and gents. And also PrimeXBT offering you the very same thing right here. But the cool thing about PrimeXBT is that you can also trade these traditional finance markets, the S&P 500, gold, silver, oil, and Forex. Very, very cool indeed, all off a Bitcoin deposit. They are offering you $7,000 in deposit bonuses as well. This is really, really cool. And their deposit bonus scheme is even easier to get, actually, because you're just going to get a flat 7% of whatever you deposit credited into your account. So for example, if you were to deposit 10k, you would get $700 of free trading cash. Straightforward, super, super simple, super easy. You can do whatever you like with those $700. You can trade with up to 100 times leverage, even more, depending on which market you're looking at. This is a great opportunity to be set up in this market if you want to be taking up some positions right here. And I think they're both worth checking out. So check them both out with the links in the description down below. And bringing us back to the chart here, as I was talking about with these bear market rallies, even if we did get a death cross, that doesn't mean we're going to be dropping like a stone. I think a lot of people get that impression from videos like this, but of course, that's not going to be a realistic take on the markets either. What I think is realistic though, what I think is important though, is to make sure that we are staying well aware of things like this. These are the kind of hidden signs where, a lot of the time, almost all of the time, probably 100% of the time actually, when we form things like death crosses or even things like golden crosses, nothing actually happens immediately, right? These are not, for example, these kind of easy to recognize support levels that the price can just bounce off or get rejected from. Like these moving averages, moving averages on their own, they can, be used as support. They can be used as resistance, right? That's not what these death crosses mean. That's not what it is. These are just representations of where momentum is. They don't even have to mean anything, but we're always going to be getting these signs that something big might end up happening, and we get them as early warning signs that fire off. I want to give you an example, a horrible analogy, but almost quite useful. You could have a situation where, I don't know, the first one that came to mind was marriage, but let's not do that because that can be sticky for a lot of people. Let's go for business partners, where let's say you want to get into a business partnership with somebody. I don't know, you want to like run a tissue box factory, and your partner gives you, some signs of greed at the very beginning, and they don't necessarily materialize, but I don't know, your business partner goes to a restaurant with you and they, and the service is phenomenal, and you're in the United States, so you have a really weird tipping culture, but this person refuses to leave any tip whatsoever. You could read that as greed. I don't care about this. This is obviously a horrible analogy, but you could read that as greed. You could interpret that as greed, and it doesn't necessarily have to materialize into anything now, but it's an early warning sign that something could be happening. And then, 5 years down the line, this dude decides that he doesn't want you in the tissue factory anymore, and he kicks you out. The point is, that is an A+ example of my horrible analogies that you get on this YouTube channel. What's important to note is that these are signs, right? These are things that, again, don't necessarily mean anything right now, but that especially when you look back in hindsight, when you've been cut out of the deal and you're no longer a factory owner, you'd be like, shit, this dude has shown signs of being greedy. Or if Bitcoin ends up being, I don't know, somewhere here in 2024, which I would hate to happen, or even if Bitcoin's somewhere here, like a similar price level in 25, or even somewhere here, just anywhere kind of like below 40k, if we're like anywhere here, over these next few years, this death cross is going to make a lot of sense. this death cross is going to make a lot of sense, because really what it's showing us is that we've lost momentum. Our short-term chart is no longer bullish compared to the long-term chart, and that is a representation of momentum quite clearly flipping bearish, right? We don't, it's hard to say what definite signs there are, right? I mean, there's it's not like you can just kind of how do I say, like in science or in math, there's like one definite answer for something, right? That's not how it works with trading, right? With trading, things are much more open to interpretation. So what we like to use are just benchmarks, just things that, there's wide agreement on, that there's some sort of consensus on, that people generally use, or that just kind of makes sense, right? And this is one of them. It doesn't mean it's the main one. It doesn't mean it's the only one, but it's definitely one of them, and it is coming fast. On the daily time frame, we've already had it, and you can see what's happened ever since. We've traded 350 bars forward, still in a downtrend from the point of that death cross. I'm just curious. I'm not actually thinking that this is going to happen, but if we trade 350 bars forward now, yeah, that's quite far. It's hard to visualize, but that puts us in 2029. So that's a whole 7 years away, of potential downtrends. I obviously don't think that's going to happen. That's way too long term. But what we're doing here is we're just kind of exploring different kind of thought exercises. I think these are interesting topics, and I think that they're worth talking about, especially at times like now. So I'm going to revisit this as the time gets closer. We're probably going to get the death cross. I don't think that Bitcoin is going to be able to navigate away from this, but my God, it would be cool if we could. But for now, what I do think is that we're still just kind of in the same equilibrium that we've been in pretty much since we fell down to this range. About 8 days ago, we've just kind of slowly been trending upwards, but, we're bouncing off a support area. We've got resistance overhead. The market knows that. The market got rejected up at this resistance area. The market is finding support at our support area with an overshot to the downside, a bit of a deviation right there. I think if we do continue to move upwards, we could continue to find resistance here. But if we're able to get above this area of resistance, I'm going to be looking at Bitcoin retargeting that high that we set on this uptrend right here, and as long as we can do that, I think we're in a pretty good position. For now, I don't like to see Bitcoin here. I don't think this is a good thing, and as long as Bitcoin is down here, I think there's a very real risk that we end up revisiting the lows that we set previously towards the beginning of this kind of situation, right at the beginning of November, with all of that FTX drama. I think that there's a good chance Bitcoin can drop down there, and so I really don't want to see us kind of sticking around in this price range. I really need to see that this level gets reclaimed. As long as we're able to reclaim the 17,000 up to $17,300 range, I think that Bitcoin could be in a good position to potentially target this key resistance. And this is the most important resistance on the chart right now, in my opinion, because this was pretty much the bottom for the market from June of this year right up until October of this year. So that is a very, very nice 3 to 4 month period right there where we were consistently finding support in the very same range. That to me means that this is going to be quite a challenging area of resistance, but if we're able to get to it, and then more importantly above it, perhaps even with a retest, that would be the best case scenario. So that is still something that I'm looking to see, to just watch if that does manage to play out. If it doesn't, probably going to be difficult to justify any sort of real uptrend for Bitcoin. But for now, I don't want to be making horribly bearish conclusions just off quite limited data. 4 hour time frame, we've got a resistance cloud developing. I don't want to give this too much credit. We're not really in a very real trend right now. We haven't really been doing anything pretty much for about 45 days now. So there's not a whole lot you can, I wouldn't want to give too much credit to a 4 hour Ichimoku cloud like this. But it's there and it could act as resistance nonetheless. Daily time frame is a little bit more clear. We are still continuing to see fairly narrow Ichimoku cloud towards the end of January, but for now our resistance is getting a little bit bigger and it is getting a little bit lower as well. So this could definitely turn into a problem for Bitcoin, and it is something that I'm going to continue to watch. Daily momentum still very much against Bitcoin. We've already seen a very nasty rejection from this daily EMA ribbon, and we're potentially just kind of floating up into it right now again. So not the best news, and I don't think that we can draw any real conclusions off these shorter term timeframes here, because again, the market hasn't really been doing anything. So I'm not able to talk about this very much either. It's a tricky range right now. It's definitely a tricky range, and overall, we're not really even doing anything. The price isn't moving very much at all. Somewhat similar story for Ethereum. We are seeing, altcoins just kind of continue to grind as well. A little bit more blood in the altcoin market, in all honesty. But again, I mean, we're not seeing anything hugely different between these markets. And so I think this is just going to be a wait and see thing to see how this kind of develops for Bitcoin for the big ones. S&P 500, obviously it is a Saturday, but ended up trading a little bit lower towards, just over the last week. On that Friday, we did get a much nicer trading session right here, but still nothing particularly great for us to read into on that side right there. And the dollar is just kind of trading sideways right now, potentially, I think, in a little bit of a bear flag situation, coiling up before another leg down. If we do take another leg down, that would make me quite optimistic about where the S&P 500 can go. If the S&P 500 rises up, I think that would give Bitcoin a great opportunity to rise up as well. So that's the silver lining that I'm seeing right there. And I still think that those, kind of upside possibilities are looking a little bit better than the downside possibilities. Just my opinion. I'm just putting it out there. You don't have to agree with me. It really doesn't matter to me. But that's what I'm seeing. And there you go. I really hope you have enjoyed this one. You know what to do if you have. Hit up the likes, subscribe, tick the bell, do all of that good stuff. Check out Bybit with that link in the description down below to get your $30,000 deposit bonus, along with Prime XBT to make that a $37,000 deposit bonus, because Prime XBT is offering you $7K on top of that. And if you're still interested in BitGet as well, I want to remind you guys that with the link in the description down below to sign up to BitGet, you will be getting up to $8,000 further in bonuses. So we're looking at $45,000 in bonuses if you sign up using my links in the description down below to these amazing exchanges. And I want to remind you guys that BitGet doesn't require you to use a VPN, or even input any KYC, no matter where you are in the world. You can still use it. United States will be slightly different. You will still need a VPN, but KYC is not required anywhere in the world. Now, obviously, you've still got to follow the laws of your own country, but this is really, really cool. And I think a lot of people are going to find this quite interesting. So if you want to check them out, they are also linked in the description down below with a huge deposit bonus right there. If you do want to join my trading group and see exactly how I'm navigating these markets in real time, along with gain access to my 𝗧𝗏 Academy course where I teach you absolutely everything I know about trading from A to Z, the steps to join that are on screen right here as well. And with that, guys, you know exactly what to do. Hit up the likes, subscribe, tick the bell, and I'll see you all in the next one. Cheers.